Yeah, so we're going to talk about Elliottwave rules and observations for swing trading and trend trading. So we're going to dumb it down. We're going to make it simple because it can be overcomplicated, but really we're only interested in one trade, and we're going to look for those high probability trades within that Elliottwave rules and observations.
The screen looks good to me. Sounds good. You have 45 minutes.
Okay. You can see the screen okay, Anna, yes?
Yes, it looks good to me. Thank you.
Okay, perfect. Thank you. Good morning, everybody. Well, good evening for me because I'm in Europe. So I've been trading Elliottwave for over 20 years now, and I've actually turned it into a bit of software. But what drives that software are rules and observations for swing trading for Elliottwave. So we're going to go through those and just dumb it down a little bit and make it very simple. If you've got any questions, just put them in the chat and I'll endeavour to answer them as we go along, if not at the end. So Elliottwave is a common sense method of measuring trends and also corrections. So we're not going to look at corrections today because that's another big lesson which actually takes quite a long time to do. The easiest one is the trends, to trade with the trend. And you know, the Elliottwave theory is a common sense method of measuring that trend. So why do we want to do that? I mean, Elliottwave is present when measuring trends in lots of different instruments. So individual stocks are in their own earnings and news cycles. So for example, it can have a really nice bullish trend, and then a stock will have a sort of mediocre or poor earnings, and that may cause a pullback against that trend. Forex pairs are also in their own cycles, but they're a little bit closely linked, but again, can react to major news cycles as well. So again, we can measure those pullbacks and start to understand how that trend is behaving. Again, futures linked to indexes and commodities also follow closely to news and event cycles. So again, there will be catalysts for those moves against trends or trend reversals, and we need to be able to understand and measure those. So in effect, we're looking at herd mentality of traders and their reactions from patterns of movement, momentum within these cycles. So it's the institutional traders that really drive this, but it's their reactions that will form these patterns. So we need to be able to label and represent these patterns in a meaningful way, respecting the same rules every time. If we do it with the same rules each time, we're going to get a good picture of that behavior. So to talk about the trend rules, these cannot be broken. There's 3 rules that cannot be broken. They're very simple, and again, watch the recording for this if you don't get it, but I'm telling you now, they're very simple. So rule 1, the wave 2 must not retrace further than the origin of wave 1. So this is the start of a trend, potentially, okay? So we get this first impulse move, this wave 1, and then the wave 2 pulls back, but the wave 2 finds higher support, so it's not broken the rule of actually breaching that origin of wave 1. That's the first rule. It's really simple. If we're going long, we've got a higher support level. If we're going short, it's the opposite way around. We'll just stick with longs for now. The next rule, wave 3 is always the longest impulse wave. It's the one with the most momentum. Okay, so we have that 1, we have that 2, it's pulled back, it's got higher support, and then we have the longest, the biggest momentum pushing that forward, and that wave 3 is always the longest impulse wave. Okay, the next rule, the third rule, which cannot be broken. The wave 4 must not pull back beyond the wave 1 extreme. So what does that look like on a chart? So we've had the wave 1, the wave 2 pullback, we've had the long wave 3. Now this wave 4 pullback must not breach this pivot point here, or the trend is over, okay? So it cannot breach that extreme of wave 1. So 3 basic rules there, very, very, very simple. Now for some observations. So these are in the box where you would check, I would like to have. Yeah, the rules must have. Observations, I would like to have, but if they are, they're all present, it becomes a very high probability trade. So observation 1, the wave 2 is if the wave 2 is simple, then wave 4 is most likely to be more complicated and vice versa. What does that look like? So if we have a very simple and orderly wave 2 pullback in the green here, you usually find we have a more complex wave 4. And then if vice versa, if we have a complex wave 2, it's usually a very simple wave 4. I actually prefer the simple wave 4s, to be honest, because they're higher probability moves, but that's an observation. It's not always, you know, the 80-20 rule sort of goes here, if you like. The next one is wave 1 and wave 5 tend to be the same length. So when we're looking, and again with our indicator suite, we actually put automated fifth wave target zones on there. And one of the parameters we look at is the length of that wave 1. It's not always the case, but you usually find that's the case. You can see here as well, we have a very simple wave 2 pullback and a complex wave 4. And then the fifth wave is about the same length as the first wave, okay? Observation 3, when swing trading, the wave 4 pullback has 3 zones that give probabilities of a new wave 5 high being formed, okay? And they're fib zones, if you like. So you'll see that's 0.25. So I've rounded one of them up to the 0.239 to 0.25, okay? So if it goes between 0.25 and 0.382 and finds support, there's an 85% it's going to go on and hit and make that fifth wave. Okay, if it goes between 0.382 and 0.5, it's about an 80% probability. 0.5 to 0.618, that's what we call it the red zone. It's the last chance saloon, if you like. 75% probability it's going to go on and hit that fifth wave target. So as you can see now, the theme of this is actually we're going to concentrate on this wave 4. We're going to look at that performance and we'll go through some more observations that will help us to do that. If it pulls back deeper than that, you really are rolling the dice. The probabilities of that actually happening and breaching this wave 3 high, it gets lower. So you want to be looking for trades with those high probability moves that have that potential there. So observation 4, so this is one of the ones that we're looking at on the wave 4 pullback as well. So when swing trading, the wave 4 pullback pulls back between 90 and 140% of the highest point on that wave 3 on a 535 oscillator. It's an Elliottwave oscillator. So an oscillator basically is a pictorial graph, if you like, of the distance between the 5 and the 35 moving average, and it basically showing you that cross-sectional area. So when we have a wave 4 pullback, that wave 4 pullback needs to crown and start to move back up between 90 and 140%, and that measurement, and we'll do that measurement on a chart soon, goes from the highest point on the wave 3. That is great behavior. So if you imagine now we're building this picture of this wave 4, well, on those pullback zones, maybe going into the green, the amber, the red, then we've got this this oscillator that we can measure that performance of the wave 4. Trend failure. Okay, so when does a trend fail? So I've talked about 2 instances that I've discussed very recently now, and let's hopefully some of you can remember because they're very, very simple. The rule 1, the wave 2 must not retrace further than the origin of wave 1. If that happens, it's a trend failure. It's failed before it's even started properly. And then rule 3, the wave 4 must not pull back beyond the wave 1 extreme. These represent trend failures. So if a trend fails, then we are in a corrective phase. So for example, here, we call it an ABC correction. So imagine this is the wave 1, it comes up, we come back down, the wave 2's got to find support higher than that origin. If it comes back and finds support lower, we're in a corrective phase, and that correction could stay pretty much you know, for quite a while. So you've got to look on, move on, look for something else that's not correcting, that's actually in a trend. So that said, that's very simple. I'm going to go to the charts now. We're going to look at some real examples. And then obviously, if there's any questions, you can pull them out. So it's only taken 10 minutes to do that because it's not difficult. Okay, so let me escape from there, and I'm going to go and look at these here. I'm just going to take some of these EMAs off a little bit for now, and I'm going to put them back on in a little while. So I'm going to look at MDB to begin with. Okay, I'm going to go through, I mean, this is a weekly time frame for stocks. I don't know if there's any swing traders out there. We'll look at shorter time frames as well. But we get a great wave 4 pullback, and it finds support in the red zone. So this is our Elliottwave indicator suite now. So what it's doing is following those rules and giving you tools for those observations to actually understand that 4th wave pullback, because trading the 5th wave is the highest probability trade. Why? Because all the other rules have been met. The observations have been met, and you've got the tools to measure those. So the likelihood is it's going to go and hit that 5th wave target, which this one has done. I'm actually still in this one now because sometimes they can push through. So let's talk through this. This is the trading view version. I think we've got it for 6 different platforms now. And what I'm going to do is going to give you a coupon code later on in this session to get 20% off this and for all the platforms that we developed for. So each candle is a week. Okay, it pulls back. It finds support in the red zone. So that's a big tick in the box right now. So we've got, you see, this is a complex wave 4. So we pull back, come back down again. That's where we are. Now, we get the wave 4 in the red zone. So there's 75% probably it's going to go on and hit that 5th wave move. But also now we start to look at what we call the stochastics. So we see these yellow dots on the stochastic here. This denotes false breakouts. Okay, so this is a really strong wave 3. It was the longest pullback, and now we've pulled back on a wave 4. When the stochastic pulls back against those false breakout dots, the likelihood is it wants to return to that overbought zone. So this is one of the new observations, if you like, when that happens. So the wave 4's pull back in the red zone. We've got the stochastic actually pulling back into the oversold zone against those false breakouts. And then we have the oscillator pulling back and crowning between 90 and 100%, 140% on that wave 4 pullback. So all of a sudden, we're starting to build a really good, strong picture of this wave 4 pullback. There's a good probability that this is going to go. So what do? We look for entry strategies. One of the entry strategies that we look for, I'm just going to take the manager off here a second. Okay. So one of the things we look for, we've got what we call a 6-4 moving average high here in blue, and we've got a 6-4 moving average low here in red. What we are looking for is a breach of the 6-4 moving average high for the long. Okay. Again, when we get this wave 4, we get a nice big rejection doji on this wave 4, and we start to move up again. We sensibly want to enter above this pivot because it failed before, and that is also outside of this 6-4 moving average high. So that's a great entry. The stop is just below the wave 4. So the risk to reward we measure is 1 to 3 to the bottom of that target zone. We're actually tipped the 1 to 4. So this is the risk to reward. So if you were to buy a number of shares in this and the trade goes against you and takes you out the stop and you were going to lose $10,000, your potential reward is $40,000 when it hits that point, $30,000 when it hits that point. And again, you can do it if you're going to lose $1,000 here, you could win $4,000 there. And that's the sort of thing. So this is a weekly chart. This could be a 5-minute chart, an hourly chart, a daily chart. It doesn't really matter. It's the rules and observations, all of these things coming together. Now the rules you don't have to worry about because our indicator suite actually changes if those rules are broken. Okay, if those rules are broken in any way, everything's relabeled. Okay, because the rules have been broken. We're not trending anymore, so it's relabeled. In this case, it didn't. The wave 4 didn't breach the highest point of wave 1 when we got a great entry. Another one that I'm in at the moment is PKI. So again, we had a great wave 4 pullback here. Fantastic, into the amber zone this time, okay? The stock, look at the false breakout stochastic dots on the top there. The stochastic pulls back in the oversold zone against these false breakout bars. And imagine it's like an elastic band, the stochastic. When it has those false breakout dots on the top, it's like an elastic band. It wants to return to that main overbought zone. And again, when we look at the oscillator during the wave 4, that crowning is between 90 and 140%. So again, everything sets up well. For me, the entry was a little bit more conservative here because I wanted to get above this shoulder on the left here. So an aggressive entry would be outside of the 6-4 moving average high, and it worked out in the end. But for me, entry strategy is always personal. I saw a rejection here and I wanted to make sure I was above there because I still had a reasonably good risk to reward of 1 to 1.55 to the top end of there. As it happens, it's gone to 1.2 right now. So, you know, again, that works out. So what I'm going to do is just going to bring over a chart now of crypto because it works on crypto as well. Because again, it's an instrument that can trend. So what we're looking for here is this is Solana. Now, I'm in Solana at 25 bucks. This is my entry way back when here. So, and now it's 154 bucks, but I'm looking to add some more. So I'm being patient. We're getting a wave 4 pullback. I've got a lot of dots on that overbought zone on the stochastic here, but the stochastic is not in the oversold zone yet. And this is where I'm going to show you how to measure this oscillator now. Okay, so we're going to use a fib retracement. Oops, fib retracement. And the way to do this is fib retracement is 2 clicks. First click is on the 0 point. The second click is on the highest point of the wave 3 on the oscillator just there. This is where our 90 to 140% is. And again, you can change those on your fib levels depending on your platform and set it as default if you want to. But in reality now, we're still waiting. We're still, in theory, a few days away before this comes into this red zone, before this stochastic comes in there. So I'm being very patient, which is one of the hardest things to do as a trader, being very, very patient, waiting for this to find support. At the moment, it's finding support in the green zone, which is brilliant. We did come down and test 131. I think 120 probably is a good leveled zone here, 107 to 120 for that wave 4 to come back. And this is what I'm waiting for. You know, I've got 85 Solana right now, for example, and what I'm doing is I want to add to this position, but those were all bought at a very low price. So I want to make sure that this profit-taking pullback, this wave 4 against the main bullish trend performs well. Okay, all the observations are met. I feel confident in that. Yes, I'm paying 120 bucks for the next round of Solana that I'm putting into my portfolio, but this is the right time to do it, and that's what I'm using the Elliottwave for a lot on cryptocurrency. So let's now go to a smaller instrument, okay, a smaller time frame, 15-minute time frame on gold. I mean, gold's gone down really big today, but this is where Elliottwave can come in as well. So let's look at this. So we've got false breakout dots on the bottom here. We've had the wave 3 printed. Now we're coming back up, potentially on a wave 4. Okay, it's not printed that yet because it's not met enough rules for the software to say, hey, this is a wave 4. But also what we can do in preparation for this, if we're looking for an entry on gold, if you like. I don't know if there's any gold traders out there. Let me know in the chat if you are. I can't see anybody in the chat at the moment. Let me just send a test in there. Let me know you can see that in the chat to make sure it's working okay. Okay, you see me, Luis. Okay. Okay, so this wave 4 has got to come back into one of these zones. The software will not label it until it actually gets into the zone, okay? It's not in there yet. The stochastic's got false breakouts on the bottom. That's good, but it's got to pull into the overbought zone. And the next thing in preparation is, where is our zone on here? So I'm just going to go over to the right, click on the 0, bring that to the highest point in the wave 3, and I can see on this 15-minute chart, if I want to go short, if I'm looking for another entry short on gold right now, I need this wave 4 to perform, okay? I need this wave 4 to pull back into one of these zones. I need the stochastic to get into the overbought zone. I need the oscillator to get in my 140 to 90 zone. Then when it finds resistance, starts to move back down again, I'm going to be using this 6-ball moving average low to go short, okay? So that's in the 15-minute time frame. People say, can I use it on lower time frames than that? Absolutely you can. Here's the 3-minute time frame, okay? On the 3-minute time frame, we actually have a wave 4 formed, okay? What we want to do now, though, is we want to add our, bear with me a second, Elliottwave oscillator and our false breakout stochastic. And we're going to measure these. So we have false breakouts on the bottom. We have crossed over against those false breakouts in the overbought zone. Let's measure the pullback here. Ooh, that was close. That was really close, but it just tipped the 140. So I'd be very, very hesitant here on this pullback. So you can see we've printed an automated 5th wave target zone. So now, where would our entry be? Our entry, sensibly, we've got a bit of support here, and I'm going to use these 2 pivots as support, okay? So if we were to enter aggressively here, we could find support at this point. There's no reason why it can't go through. It only just tips the green, though. This could continue to go higher. My thing is, look at this behavior. This could come down and test here and go back up. This could be a very complex wave 4. So in theory, if we're going to enter this, we're going to enter below here at 1750.01, for example, okay? Our stop's got to be above the wave 4. And then we're going to work out our risk reward, okay? So we're going to use a fib extension here. This is 3-click operation, fib extension. Click first on the stop, second time on the entry, the third time just bring it to the right, put it on the entry. This is a 1-to-1 trade. For me, it's not good enough. I like a 1 to 1.6 into that 5th wave target zone there. So I wouldn't trade this right now, okay? That's what I'm saying. That's what I'm seeing right now. But then when I'm looking on this, this 15-minute, it's got some way to go right now. So again, being patient. Let's have a look at, yes. If anybody wants me to look at anything in particular, please let me know, okay? Look at a yes. Okay. So what we do with the Elliottwave here is we've got a bar count number up here, and it's different for each platform, but it works the same way. So what we're looking for is this the start of this trend? Is it not? Okay, this pivot point here. So that bar number is 200.12. So then I go into my Elliottwave, 200.12, click OK. And lo and behold, that's where we have the wave count right now, okay? There's no real trade there at this moment in time. Looks like it's going to continue to go down, to be honest, but there's no trade there. So we don't start trying to look for trades that aren't there. Is NQ tradable right now? To be honest, it's been pretty whippy, those indexes today. And again, look, it's an ABC correction at the moment in time. It's corrective. We're not looking for the trade. Any Forex traders out there, by the way, let's have a look at a Forex trade pair. Let's go to my currencies algo, and let's go to Euro US dollar. Okay. Oh, wow, there we go. That fifth wave was phenomenal. Okay. So again, Forex traders, let's measure this. Okay. Let's start from the top. We have a wave 4 pullback into the green zone. Okay. 85% probability it's going to go on and hit that fifth wave target zone. As it happened, it pushed through a little bit. We have false breakout dots on here on the wave 3, and then we have a stochastic pullback against there and crossover on the wave 4 in the overbought zone. Let's measure this wave 4 pullback on the oscillator. So we have the highest point, we have the 0 point here, and then we have the highest point on the wave 3 there. Stochastic, good. Elliottwave oscillator, good. Wave 4 pullback, phenomenal. Hit the green zone. Where's our entry? This was a simple wave 4 pullback. Remember one of those observations? So we've got no real pivot points. We can go reasonably aggressive outside of this 6-4 moving average low. So our entry is just below here. Okay, just below this pivot here, and our stop is just above the wave 4. So when we're setting up this trade, we then look at the risk to reward. Again, we're using the fib extension. Click once on the stop, second time on the entry, move it across, third time on the entry, 1 to 3.5 into that fifth wave target zone. Very high probability move there. Again, very simple, trading the fifth wave, it's the highest probability move. And you would, if you were trading on this 3-minute time frame, whether it's futures, Forex, or anything like that, when you get that wave 4 pullback, you've got the backup from the oscillator, you've got the backup from the stochastic, go reasonably aggressive outside the 6-4 moving average low, the red one this time, just below this support. Risk reward is 1 to 3.5. It's a no-brainer. You go short. So if you're risking $1,000 right here, your potential reward is $3,500. As it happened, this one made $5,000. But that's just a prime example. I hadn't teed that one up, to be honest. I just wanted to look at Forex, and that's how that goes. The question: can we do the chat rather than the questions? Because it's very hard to see the questions on GoToWebinar. TradingView. On TradingView, you would set up alerts on the right-hand side here for TradingView, for example. So you go to alerts, and you would add an alert. And then what we're looking for here is the Elliottwave. So you click on Elliottwave, and you are looking at, bear with me a second. Just crossing value, bar number, okay, and then only once per bar, that sort of thing. And then you just, again, we only do alerts on TradingView version. We do have a video for this. If you want to look at the video, I'm going to put it in the chat, an email address for Damien. He can send you the link, info@globaltradingsoftware.com. So if you email Damien at that email address, he will send you the link to the video to show you how to set up these alerts. Basically, I alert for a wave 4 forming, for that bar number. So when a wave 4 forms, you get an alert, okay? Just bear with me a second, because Oh, excuse my dog. Where's the safest place? Where's the safest place? It's the fifth wave trade. Everything has to book up. BTC USDT. Okay, so let's go to Bitcoin. Okay, so any particular time frame, Eric, on BTC USDT for Elliottwave? Any time frame that you trade? Because again, it has to perform on the time frame that you like to trade. So please put it in the chat rather than the questions. Okay, the chat is easier for me to see because the questions just don't come up very well. It really. 4 hour. Okay, so let's just choose this chart. Let's cleaning up of the other ones for now. Take the harmonics off. And then let's just add Elliottwave. We need the bar number. We need Elliottwave indicator suite, Elliottwave oscillator, and we need stochastic. So I've added all those to the chart. I'd like to take that up to the top. And we're going to change that to 4 hour. Okay, so bear with me. Very choppy on the 4 hour, but let's go back to these lows here. That is where I like those. So we're just going to put that bar count at 2895. So again, you need to identify the start of a trend in reality, okay? Start of a trend is here. We've had little wave 4 pullbacks, but nothing really mega. I mean, to be honest, we need to be on daily, really. We need to be looking at this current trend just here. We need to look at that bar count, and that will give me a 483. So I'm just going to change that to 483. Again, you need to understand where it is in the trend, and this will do that for you, okay? Did I get that right? Change it. What's the 483? Ah, that's why, 483. There we go. Okay, so this is where we are currently on Bitcoin. So, more importantly, what we're looking at is the wave 4, okay? Right now, we've had a wave 4 pullback into the amber zone, okay? We have, and this is a very special situation because let's put the measurement on for the oscillator, which is good, okay? Now look at the stochastic though, it's not crossed over in the oversold zone. Okay, now, remember, it's an observation, not a rule. So if you wanted to go long on Bitcoin here, it's a little bit dicey because you got some major resistance up here, okay? Now, forget the resistance. You want to go above the 6-4 moving average high at this price. Your stop loss has got to be not just here, but this pivot there. Your risk reward is only 1-to-1, okay? Your risk reward is only 1-to-1. In reality, what could happen, let me change this to, that'll do. What could happen is this wave 4 could come down, come up to test this resistance, and then move down lower and test this again down there. By that time, we will see the stochastic turn and come back under there. That is the ideal situation with Bitcoin, Eric, if that makes sense. You're welcome, Eric. But I really like Solana at the moment because this, again, I've got about 85 or whatever of these, and on the daily, we are pulling back. Oh, that's the wrong one, isn't it? Let's go to crypto. So this is pulling back. I showed you that other chart right now. This is pulling back beautifully. Everything's behaving very, very well here. One of the things we look at, let me just put this wave count on here, that bond was 344. One of the things we're looking at right now is, you can see I've got the volume on here, but also we've got the volume behavior candles, part of the manager indicator suite that we've got. This pullback is lower than average volume. Okay, you can see that wave 3 is higher than average volume, big impulse move up. This profit taking is slow, orderly, lower than average volume, and we would look, you know, come and test this sort of 140 level, maybe even down into this 120 level here. We've just got to be patient and wait for this to happen. So that's where we are right now with Solana. So anybody want me to look at anything else? Have I missed any questions? Because I would really, guys, if you can find the chat, use that. It will be a lot easier. I use high Kanashi candles because when I go back to here a second, I'm using high Kanashi candles because they're averaging candles, and I use other. We've got another indicator, and that's called an XBRAT algo. So what that does is that relies on high Kanashi candles to give signals. For example, like this here, this 6-star sell on gold that's just continued to tumble. So that relies on high Kanashi. Okay, it doesn't affect Elliottwave because the highs and the lows are still the same. It's just the body of the candle is different. It's an averaging candle. Any more questions? Want me to look at anything? We've got about 7 minutes left. So what I'm going to do in the chat, okay, I am going to put a link to the Elliottwave indicator suite on global trading software. So that's for TradingView, MotiveWave, NT4, Thinkorswim, TradeStation, and one other. If you use the following voucher code, coupon code, you will get 20% discount on the Elliottwave indicator suite. It's only for people that have attended this webinar. It runs out midnight Friday, okay? Midnight Friday, this runs out. We're on Thursday right now. That Elliottwave Suite 20 is the coupon code for the Elliottwave indicator suite on any platforms. Thoughts on SPX and SPY? Let's have a look. What am I? I'm on crypto spot trading there, so I don't want to go on that one. Let's go on my stocks one. Let's go to SPY. Okay. So right now you can see we're printing a wave 3 on SPY. We've got a very strong false breakout stochastic here. The oscillator's pretty much flat, so you can see that strong move up really on the weekly time frame with SPY, and we are waiting for a pullback really if we want to trade SPY. And right now, I like this sort of zone here, around about 404, 405, pulling back into the green zone. Now, if that actually does fail and comes down further, we've got quite a fat zone then, but I would say in and around that sort of support and resistance zone there. So that's what I'm looking at SPY there. I'd like to go out on the weekly, see where we are on the trend, where we are on the Elliott wave count. And right now, that's telling me I'm in a wave 3, strong wave 3, lots of false breakouts on that stochastic down there. And that actually is, you know, we need a pullback. And that's the sort of area that we would find initial support. If that wave 4 finds support in there, and we're backed up by a stochastic crossing over here, the measurements on the Elliottwave oscillator, we'd be looking for a long, okay? And yeah, it's same sort of picture really. This wave 3 is a lot higher, and in reality, what we're looking for is a big dump on SPX down to that sort of level. That pivot here, you look at this wave 4, it hung on to the red zone here and then punched up, okay? So the candles hung on to that. Now we're on a, see, this was a 5th wave, but this became longer than this original 3rd wave. So now the software's reprinted it a 3rd wave. And a lot of people ask me, how do you trade the 3rd wave? Getting a 5th wave, if it keeps going, you're in the 3rd wave. And that's the safest way to get into a 3rd wave, by trading the highest probability move, the 5th wave, okay? And then if it just plows through that, the 5th wave target zone, it reassigns it a wave 3, and then you're looking for that wave 4 pullback. And I think 3,400-ish to 3,200 would be a great support for SPX. And one of the reasons why I stayed in PKI, because we had a real big high volume candle push through that 5th wave target zone. We've come back to test the support now. So this could continue, become longer than that original wave 3 and be reprinted a wave 3. And I'm in a 3rd wave on a stock that I've been in since May, okay? NDB, the same thing. It's pushed through, it's trying to push through right now. I got sensibly some great profit locked in. This was an earnings reaction here, which you rely on. But now we're looking, and it could keep going. I think I'm in amber as well. Yeah, amber's, you know, just approaching that 5th wave target zone right now. It's on and on and on. This is a weekly time frame, but it happens on daily time frames. If we go to the daily time frame and we look at IRM, recent trade we've had there, look at that. Hits the 5th wave target zone, okay? That was a 1 to 4 trade. So really, really, it's high probability moves, the 5th wave move. That's what we're looking for. The rules that we discussed are built into the indicator suite, and it won't let you trade it without it. And then we talked about those observations, very, very important to measure that wave 4 pullback behavior. And if all those stars align, we've got good entry strategies to trade to that 5th wave. So I haven't got long left now. Thank you, Louise. Are you one of our users already? Again, it's very difficult to see this. Oh, okay, brilliant. That's excellent. It's always good to have somebody on that actually uses our indicators, so that they're a good sort of ambassador for us, really. So again, in the chat box, go to the chat box, guys. You go on to globaltradingsoftware.com to the Elliottwave indicator suite, and then Elliottwave Suite 20 is the coupon code to get 20% off. That runs out Friday midnight. Okay, Friday midnight. I've not even put it on the screen because I don't like giving stuff away. I'm from the north in England, and I really don't like giving stuff away. It's in the chat. If you can't see the chat, you can't get it. Okay, 20% off the Elliottwave indicator suite for lots of different platforms. Okay, so my time is up by 20 seconds, Anna.
Okay, today I am going to talk about, let's see if I can bring it there. No, I've got to bring up the first screen here. Hang on just a second, folks. I'm Sunny Harris. Well, okay, it says I'm Sunny Harris on the screen right before this one. So I'm going to talk today about being a pragmatic trader. To me, it's important just to get down to the business. I love the beautiful graphics, but the most important thing about trading is to make money. And I'm going to teach you how to make money today in any market condition, any time frame, any symbol. So I have a website called moneymentor.com. And if you go to Quips on the Money Mentor, you'll see that one of my students said, Sunny will save any student of trading an enormous amount of time, money, and above all, frustration. She combines an encyclopedic knowledge of trading systems, mathematics, and software with a master teacher's ability to focus on exactly what is relevant to the student. She combines all this skill with a personable, warm, and friendly manner that is rare in any teaching situation. Manny. And Chip said she's part Einstein, part Will Rogers. She's absolutely brilliant. Thank you to both of you. The disclaimer is you can and will lose money trading, and you can even lose all that you've got in your account and more. So it is a risky venture, but at the same time, you can and often do make lots of money doing it. So please read this. It's on my website as well. So if the stock market's got you down, pick yourself up, dust yourself off, and I'll help you get us started all over again. I love to help people who are A, new to trading and want to get going on it, or B, who have had some lessons from the School of Hard Knocks and want to figure out how to do it profitably. Recovery can happen. It always can happen, but it might not be the way you expect it. It might take the form of trading both long and short sides, or trading a different time frame or different symbols. It might mean revenge trading. You know what that is? That's, I lost money this morning, and so I'm going to make it back this afternoon, that kind of thing. But you can only recover if and only if you have a strategy with a mathematical expectation greater than 1. And I'll be happy to explain that to you. Give me a call. I'll give you my number at the end. You can always call me. And it might just take the form of learning more about how you can do it on your own. And of course, I have just the education course you need. When you get this presentation online, you can click on the hyperlinks and you can see that it'll take you. Oh, it's going on to a different monitor. Anyway, click on those, it'll take you to my website. Let's see. And it might take a mentor, which I am a mentor and a coach. And I have 3 coaches of my own. So, all good athletes have a coach. Bodybuilders have coaches, professionals have coaches. So it's always good to have that. And it might take buying specialized indicators like Paul's or like mine to assist you in your decision making. I have 3 degrees in mathematics and 1 in photography. And I have written 5 books so far on trading. And I'm writing a 6th right now with a friend of mine, Samuel K. Tennis, who is, quote, Ask Mr. Easy Language. And so Sam and I are writing TradeStation Easy Language, Object-Oriented Programming Made Easy. So it's a programming manual. And I've been trading for 40 years, more than 40 years. I am a mathematician and a programmer by profession and training. I'm an author. I am an international speaker, mentor and educator, and I've won many awards for solving the puzzle, which is my education course, and for my private consulting. Here are the books that I've written. Do I have the 6th one on there? Oh, I do indeed. Look at that. Easy Language, Object-Oriented Programming Made Easy. 2 years in a row, I was the #1 trader, rated by Stark Research, with 365 and 178% profit. And this was using the 2 indicators that I'm going to show you in just a few minutes, Sunny Bands and my dynamic moving average. I'm consistently rated in the top 10 consultants by Stocks and Commodities Magazine, third there. And my flagship indicators are, and this is the inner sunny bands and the outer sunny bands. The inner one's on a 1 minute chart. Nope. This is a daily and a weekly chart. Yep, of Bitcoin. So you can see there that what I do is I put double time frames on, and in that way I can see what the overarching picture looks like. At the same time, I can see the current picture. I do that for my own trading. That's what I started to say. I do it on 1 minute and 5 minute charts of the EMini. And it tells me everything I need to know. Now there's the same chart, and it shows you the ideal turning points, the longer term direction, the current direction, ideal entry and exit points, and the size of the anticipated move. Profit and loss protection stop areas are available by putting your stops at the bottom sunny bands if you're going down, and top sunny bands if you're going up. You have the projections. And I've been using it for more than 30 years. And in fact, this was how I got rated number 1, was using sunny bands and my dynamic moving average. Of course, you can have these for your own. Three simple indicators is really all I use to do my trading. And you can see that there at moneymentor.com. Money Mentor has been on the internet since 1995. I'm one of the longest standing websites, and I completely revamped it in the last year, and it's more modernized. So the question really is to trade or not to trade. Is it going to make you more money than working at McDonald's? That's the first question I ask about every trading strategy. You know, if you're trading something and you're ending up negative, then you could do better working at McDonald's. It's my passion to trade, and I want to do this more than anything else. And I still, 40 years later, devote myself every day to my trading. It is an exciting business, that's for sure, but it's even more exciting when you're losing money. It's the stress of it that causes the excitement. So you try revenge trading, you're going to make it all back at all costs, and it's usually the all costs that happens. The nice thing about trading is it's an independent way to make a living. You don't have employees, you don't have a boss, you don't have office politics. It's just you and the market. You don't have to have an office. You can trade from your desk in your bedroom or from the bed. Put the laptop on your lap and go to it. So I want to start with the pragmatic part. This is a pragmatic talk, so we're going to talk about what is pragmatic about trading. To make a living trading, you must have a goal amount that you need to make per year. Let's say that's $120,000 per year. That's a decent income. If you divide that by 12 months, you get $10,000 a month, and that still seems like a large amount to make trading. But let's keep going. Divide that by 4 weeks, and I know I'm approximating, but it comes to about $2,500 a week. Now that seems a little more doable, but for a lot of people, that's still a stretch. Let's divide that by 5 days, and we get $500 a day. Now that's not so hard. It's pretty easy, in fact, in the EMini. So it's not so bad when you look at it that way. Let's divide a little bit more. $500 a day means with 6 hours per day, and it's actually 6.5 hours a day in the standard EMini day session, that's just $85 an hour. If you're a short-term trader like me, you can go even further and assume that there are 5 trades per hour in the EMini. That means you're taking a trade every 12 minutes. That gives you $17 per trade profit after slippage and commission. Now, that doesn't seem so bad anymore. $17 is all you really have to achieve in order to make $120,000 a year trading one contract of the EMini. Now, I don't trade one contract. I trade more than one contract. But I do have a live trading room on Tuesday mornings at 10 a.m. Pacific time. For 1 hour, I have a live trading room. I'm actually trading real money. It's my money. And I trade one contract because it makes me too nervous to talk at the same time that I'm trading and give instruction while I'm doing it. But if you want to come to my trading room, go to moneymentor.com. It's free. Sign up for the trading room. And that is doable. $17 per trade. And that's what I mean by pragmatic. All right, so that's great. But how are you going to make $17? I'm glad you asked. It's a matter of getting in near the bottom and out near the top. Notice I didn't say at, because you're going to never consistently get in actual tops and actual bottoms. You're always going to be a little bit off. Some people can do it some of the time, but no one does it for any extended period. So let's go back to the chart I showed you on this 9th slide. Here we go. This is a real-time session. And you can see I have dots at the end of my chart so I can see where the market's going. And I have a little indicator called bean ticks, if you can hear that. So you can see my DMA over here has turned red. That told me at this bar right here that I was supposed to go short. And that's beautiful trade, isn't it? Watch that. Bean ticks is my indicator that makes a little sound. I can tell how fast the market's moving and in which direction by listening to the sound. And I can't trade without it. It makes a little bean sound when the market goes up and a bong sound when the market goes down. So that's what a real trader does. And according to Mark Twain, if the stock market experts were so expert, they would be buying stock, not selling advice. So when you choose a mentor, be sure that he or she is actually a trader, because people who are just selling advice often aren't traders. But I've been trading full-time since 1981. Trading is about where to get in. Now, this is a friend of mine, Joe Krutzinger, said this, and I think it's very, very valuable. Trading is about where to get in, where to get out if you're right, and where to get out if you're wrong. That's about it. Mark Twain also said in this, I don't have it on one of these slides, but he also said trading is easy, or investing is easy. You just find a stock that's going to go up and buy it. So it all starts and ends with a chart. And here's how I do it. This is all you'll ever need, or all I ever need. This is the chart that I showed you earlier, and you can see on Bitcoin. Now, this is a few days old. It's from July. But you can see there that it was in congestion at the bottom. It was underneath. It says purple at the far right of the screen. That means purple's on top. So the purple line was on top, telling me I should be short from right about here is where we went short, and short Bitcoin all the way over there. And the red, green, purple, and gold lines on the bottom are my DMAH, Dynamic Moving Average Histogram. And that tells me everything I need to know about entries, and the sunny bands tells me everything I need to know about projections. So here's what I do. I'm going to dissect it for you. This is a chart of the EMini, and that was, I don't know, last month probably too. And you can see that I've drawn these orange lines are, I call them attractors, but they're support and resistance. As they go across there, you can see that it's in this channel. When it breaks down below that, you see it goes on down. And then I've got Fibonacci projections on that. I depend on Fibonacci with my analysis. And yes, I count Elliottwaves too. You need to use all the tools that you at your disposal, everything you can use to battle the professionals who are out here doing this. So there's a blank chart. I draw the attractors. There they are. Then I put on the Fibonacci retracements. That's that. You can see it goes right back up to the 76.4 retracement. I don't know what it does after that. If we have time left at the end of the talk, I'll do some live trading. You bring up live charts and let you see what I'm doing. We'll see that if we actually have that. And then I have these pennant formations, which are blue lines that form little triangles or pennants at the end of congested areas. The red lines on the top and the bottom show me where the exits and entries are. If it goes above that, I'm long. If it goes below that, I'm short. So I like to see this congestion. It tells me that a big move is impending. And it's highlighted in yellow to make it easy to read. Sam Tennis did that for me, put the yellow part in as part of our Easy Language OOEL book. And then we add the sunny bands to it, and that takes different information. And then the DMAH is at the bottom, and you can see how that shows you everything you need to know. And if you want to give me a call, I'll give you my number at the end. It's my cell phone. Call me anytime. I always tell people any day, anytime, I'm available. I'm kind of obsessed with trading, and I love to talk to people about it. And it's free to talk to me, ask me your questions. Just tell me you went to this presentation, and I won't charge you anything. So then we're going to zoom in and get the signals. So there is a close-up, and you can see that the signals are, oops, what happened there? The signals are quite precise. Right here, when this goes from purple to green, there's the long signal right there. Oops. Right there is the long signal on this bar. So you go up, 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 and then when it comes above and then goes back in the sunny band, we go short. Short, short, short. Just stay short as long as that's going down. It's when you're doing it right, it's boring actually, because you're just going long and short, taking money out of the market. So, I'm not going to analyze symbols of your, well, I guess I could analyze symbols of your choice. Tell me the symbol and I'll pull up the chart and tell you what I think. Does anybody have a symbol they want to see in the chat? Not so much, okay. We'll move on then. So I was going to take some time and see if I can answer any questions before my time is up. There's no such thing as a stupid question. So I would like to bring up charts now of live charts and show you where I think the market's going. So right here is what I look at all day long. And let's look, where is Bitcoin? Let's look at Bitcoin, see what it's doing today. Here's a 1 minute chart of Bitcoin. Where's my mouse? I've got 4 screens I'm looking at here. So I'm going to change the time frame to a daily chart. This is TradeStation I'm using, by the way. And you can see that back here was where that chart in the presentation was. And it was in congestion, but it kept stopping at this lower, I call them attractors, but it's a lower Fibonacci number there. And then it goes up, and sure enough, it just hits this top Fibonacci line, and it's retraced back somewhere for that. But I do think that Bitcoin's going on up. Right now, my DMAH is showing me that this is stagnating, and it's expecting it to go down a little further. And, you know, anything's possible. Commodity stocks, anything, they don't move straight up and straight down. You know, they have a lot of wiggle room that they go back and forth. And I use these average 2 ranges, ATR, for stops. And I do have stops below there to show me where I want to get out. I don't like to take losses, and I'll take them quickly. I'll take losses very quickly. Get out, take a loss, take another loss, and then stay in for the long term. I also like 15-minute charts. Pardon me. So this is a 15-minute chart of Bitcoin. I'm going to see if there's any questions yet. Attendees, I've got polls, chat. So if anybody can ask anytime, go right ahead and ask anything you want to ask. I've got questions. Yes, thank you. Oh, here, I do have some questions. What platform are the indicators for? They're for TradeStation and multi-charts. Thank you for asking that. What platform? That's that one. Louise? Will this video be available on YouTube? Yes, it will. Anna puts it up for us. And I will also link it on moneymentor.com. I'll show you Money Mentor in a few minutes. Brat algo. I don't know what that means. Yes, I am. Great tools for trading. Absolutely. Thank you. You have some great tools for trading. I absolutely do. And this is all I use. This is, to me, this is the answer, because it just solves everything. Let's look. Sorry.
Sorry, Sunny. Edith asking which time frame you use to trade.
I use 2 time frames on my EMini charts. I use 1 minute and 5 minute. Thank you for asking that. In fact, let's do ESZ21. Well, I've started typing something else. Let's started typing Tesla. So here we have the 15-minute chart of the EMini. I typically do a 1 minute chart of the EMini, and I add to that a 5-minute chart. So I would have to add a symbol, same symbol, ESZ21. This time I'm going to edit the data and make it a 5-minute for data 2. And I put them on the same chart with 2 sets of sunny bands. And I'm not going to go through all that right now, but I do have a YouTube on. If you look up Sunny Harris on YouTube, you'll see my videos on how to add 2 different data streams to the same chart. And you'll see right through here that 1 minute chart, we call that sharply sideways. It's just, it's not doing anything. But I was going to bring up Tesla. This is my favorite stock. And when I'm trading stocks, which is also all the time, I buy and sell. Time frame daily charts is what I use for trading stocks, and I overlay that with a weekly chart, and it's calculating. Oh, I know why it's calculating, because there's a 5-minute chart on top of that. Well, we'll have to wait for that. Let's see what else we have in the way of comments. Which time frame do I use to trade is 1 minute and 5 minutes, and I do use the daily chart for stocks with a weekly chart on top of it. And that's not going to happen. So let's just bring down another chart. Well, that's not going to happen. I'm sorry. It's irritating when there's an error in the program. And it's not stopping. So we'll just let that go. As I said, I do have a live trading room. Go to moneymentor.com. Oh, that's what I wanted to show you. I want to show you some, while this is failing us, we're going to hopefully look at some Money Mentor stuff. I've created this website years and years and years ago. So it's been up 1995. What's that, 35 years or something? And I'm really sorry, folks, but this is failing again. Oh, boy. Anyway, moneymentor.com is my website that I've had up there forever and ever. And just 1 second and I'll bring it up. And I'll show you some of the things that I do with it. Here we go. I'll enlarge that. And you'll see across the top that I've got all kinds of little menus of things. If you want to see when I'm talking again, you'll see right there that this is today's talk for Investors Expo. You can leave me comments. You can find out where I am and what my numbers are. You can look at all my products. I do consulting and mentoring. I have a virtual learning course. I also, if you want to, TradeStation has been lax in their answering of the phones lately. So if you want help with TradeStation, you can talk to me and my programmers, and we'll solve your problems for you. So work on TradeStation.com. You can come there. The live trading room, you can see, you can come here and sign up. It's free for the time being. And if you join now for free, you get to stay free you'll be a charter member, and you'll stay free for as long as you want to keep coming to it. The articles I've written, my Sunny Side of the Street, which is a free Sunday night newsletter that I put out, it uses Sunny Bands and my DMH both to give you predictions of where the market's going and commentary. So that's free. I've got a reading list, a comprehensive reading list of all the books that I'm aware of so far in the industry, A through Z. When I get around to it soon, I hope. And this is my library. You can see I have a few trading books. I have a book club and book reviews. And then this is fun. I keep my resources here. So a couple things. One, there's a glossary, A to Z. You can see all that, words that you want to look up. I have downloads of indicators and spreadsheets and different kinds of things that you can download. I keep my reference materials here. So, you want to know bank rates, you want to look area codes, you want to look airlines code looks up. The one that I like is the color palettes. I like to have colorful charts, and I use color palettes to put in the numbers for colors into TradeStation. And TradeStation Made Easy, which is the latest book that I wrote. And you can see color figures there and all kinds of things, resources. And I have another website that I'm just going to put up soon, Easy Language OOEL, which will be related to the new book that I'm putting out. And then quips and quotes. You can see here all kinds of things that people have said to me over the years about my services and my indicators. And then if you want to buy something, of course, there's an order form. If you want to see what those products are before you order them, you click there, and it shows you pictures of all my indicators, everything that I have. Now, these were programmed for me, for my own trading. They were not programmed to sell. I sell them because I feel like people need the extra boost to make money. I want to see paper. I have one of my favorite clients, a guy by the name of Don, went from a $25,000 account, and now he's up over $3 million. And, I like comments like that, but he's using Sunny Bands. That's how he got there. This is the DMAH. You can see the same lines I showed you on the chart. That's the strategy. You'll see this in my sunny side of the street. This is a spreadsheet, really, but they call it radar screen, showing you can sort by these and see all the stocks that are the highest profitability targets. So it goes on and on and on. Now let's go back to the presentation. See, I don't know that I have that much left. For some reason, this is got cut short. So I'm open to more questions, or I'm going to be short for the day. I don't know what happened to the rest of it. I'm really sorry. So let's see if we have any more questions. Bitcoin, please. BTC USD. Okay, I'll be happy to. Let's see if we can pull that up. Hang on just a second. Well, I'm just going to type it in BTC USD. And it's not coming up. Well, this is really frustrating. I'm going to get out of that, and we're going to go over to TradeStation this way. Yeah, and I don't know. Sorry. I'm going to re-record this thing and put it on YouTube for you, so you can see what I'm really trying to say. So, Anna, don't record this one. Don't post it. I'm really sorry. It just isn't happening today. Any more questions? Go ahead.
ALB, please. I've been long so far.
ALB?
Yep.
I can't bring it up. TradeStation's crashing. You see calculating studies and or strategies. It's still doing nothing. So I apologize, but that's just not happening today. TradeStation's not cooperating. Can you read some of the questions to me, Anna? It's really impossible to see here on the go to webinar screen.
The one from ALB was the last one so far. Waiting for more.
Yeah, ALB, I've been long so far. I would love to be able to do that. Let me see if I can see it without bringing it up on the monitor. Here. What time frame do you want to? Daily, I presume? And that's not happening either. Trade station's crashed. So I'm really sorry. But trade station crashed and I can't show you. ALB. Nothing. Crickets, as they say. So give me a call. Let's go back and I'll give you my numbers. You can give me a call and we'll take care of it that way. Hang on just another minute. There, and then I have to change it to display settings and bring it back on here. There we go. Now we're going to go all the way to the end. Well, shoot. Oh boy. Give me just another minute. Okay, there we go. So anybody that wants to from this presentation, you've got a free 20-minute consultation. If you'd like to give me a call at this number, Sunny@moneymentor.com. Cell phone, I'm in California, 760-908-3070, or you can Skype me. And I'll be happy to answer any questions and give you a copy of what the presentation was supposed to be. All right. Thank you very much. I'm sorry for the technical difficulties.
Thank you so much, Sunny.
Thank you, Anna. Still having a crashing trade station.